Hello and welcome to this evening's episode of Earnings Central, your evening stop for everything that happened from the earnings calendar today, in case you missed it during the course of the trading day. Unfortunately, I don't have great news for you from the earnings calendar today. Disappointments for the first time in this earnings season from large bellwether companies like L&T, not great numbers from companies like BHEL or ONGC, and that has sort of sullied the market's mood. As you would have seen, markets are down quite sharply. But let's start off with the most influential number today, disappointing set of earnings from L&T and a scaling back of their guidance for fiscal year 2010. Here's the management.
There are some genuine delays in certain areas, some projects, as a result of which in this particular quarter we have experienced degrowth. Now, let me explain this particular point. First of all, there has not been any cancellation of any orders. Secondly, it's not that the sales have been lost. It is only the execution which is getting postponed to some extent. And there are several reasons for that. The first is there are some projects for which we have had genuine difficulties in getting fronts. I'm not talking of funds, I'm talking of getting front clearances. There are some jobs which are under execution, and those jobs in between have experienced some difficulty in front, as a result of which there has been some delay. There are some jobs where there has been some fund constraints, especially in the water sector, and this has happened in the last 2-3 months in some of the states where they have had some difficulties, and because of which we purposely decided to go slow in execution of some of those projects. The third thing is, we did genuinely expect the road projects to pick up once we reach the financial closure. However, that pickup has been a little slow, and it is only now from January onwards that the things have picked up in those 3 road projects in Gujarat. The other important point is that there are some jobs where we expected sales to be there in the current year from the new orders. Those orders, the decision-making process itself has got delayed beyond our expectations. For example, there were some projects which should have been decided 9 months ago or 6 months ago. They are getting decided now. And we expected some execution arising out of that during this particular period, during the year. So there are several reasons because of which, during the after the second quarter also we expected that things should pick up, but there were some other difficulties which cropped up during this particular quarter.
That is the point, Mr. Devasthili, because even the first half performance of L&T was a bit lower than what the street was expected, and you've had to lower your guidance again, leading to questions on whether you're accurately able to predict the extent of deferment of these projects, because you did not see this coming in the last quarter.
No, then I think it's not a deferment of the projects. It is actually the execution of the projects. You see, let me tell you, we have an order book of 91,000 crore. And in this order book of 91,000 crore, they're all very genuine orders. It is a fact that in some cases we did not foresee or we did not expect the execution difficulties which we have experienced in this particular quarter. And therefore, there has been a delay in realization of the conversion of orders into sales. Since December, the things have picked up, and but at the same time we cannot catch up with the period which is lost completely. However, our effort is to make sure that we maximize execution during this particular period of last 3 months. There are some infrastructure projects where also there was problems of fronts. I don't want to talk about an individual project, but there are at least 4 projects where in between the front clearances became a major issue. So, especially on the part of the customer, land acquisition was some problem. Some clearances to be obtained. That also resulted in some delay. So it's an overall delay in execution. We have to catch up with that, but it's not possible to catch up completely and achieve that 15% growth.
Mr.
And in any case, one point
Yeah, so just one clarification. You are now guiding to 10% growth, which means that you have to do somewhere in the vicinity of 13,600 crores in terms of revenues in Q4. Given the deferments you've seen, are you confident that that kind of a revenue mark can be reached in the last quarter?
We are reasonably confident. We have done a very detailed review of what is to be achieved in the balance period of 2.5 months. Every operating company we have reviewed jobs under execution, what is likely to happen, and it is based on that we are giving this indication of about 10%.
I just want to talk about this margin expansion as well, Mr. Deosthali, because a large part of it seems to have come because of a decline in employee expenses. In fact, there's been a 220 bips decline in employee expenses as a percentage of sales. What exactly has led to this employee decline, sir?
Actually, let me talk about this margin expansion. The first point is, if you look at the manufacturing, construction and operating expenses, the real decline is there. As last year in the third quarter, our manufacturing expenses were 79.5% of the sales. This year it is 76.2%. And therefore you'll find that there is a substantial improvement in manufacturing expenses. Similarly, if you take the 9-month period, from 79.3%, it has come down to 76.8%. So almost 2.5 to 3% improvement is there in the manufacturing expenses. There has not been any decline in staff expenses. I don't know. If I read these numbers, staff expenses for the current year, for current quarter are 544 crores. And for the 9 months, it is 1764 crores versus 1485 crores last year. So there has not been any decline in the staff expenses. In fact, there is an increase in the staff expenses. The real improvement in margins has come because of savings in the manufacturing cost. There are a lot of reasons for that. One is, of course, there has been some saving in procurement because of lower prices in the jobs where there is no escalation clause. So there is improvement in that. Tremendous amount of value engineering has been done in the manufacturing space because there is an improvement across segments. It is not only one segment. It is engineering and construction, electricals and electronics, and there is a very smart improvement of 5% in machinery and industrial products. So in all the businesses, there has been an improvement that is predominantly coming in savings in manufacturing cost.
Mr. Deosthali, the most important answer that your investors will want is a clarity on by when you think these execution delays will be arrested and you can get back to at least 17, 18, if not 20% kind of revenue growth or top line growth. Okay, what is your best assessment of which quarter that process can get underway?
Then I can clearly tell you that kind of a growth will definitely be there, or much bigger growth is required in fourth quarter for us to really achieve that 10% growth for the year as a whole. So you will see clearly in the last quarter, there will be much higher growth than what you are expecting. You see, the point which I was trying to make is that there are two issues. One is that there are projects where there are customer-related problems, and there are projects where there are problems related to small irritants. What we are experiencing is at most of the projects there are irritants, and therefore, as I said in the beginning some time ago, that we are experiencing pickup in towards the end of December. However, we cannot catch up with that 15% growth for us to achieve 15% growth for the year as a whole. And therefore, we are saying it will be 10% for the year as a whole. However, for the quarter, it will be substantially higher than that. And you'll see, I think, unless we achieve that substantial growth in the last quarter, we won't get 10%.
That's right. Now, my bigger question is not about you achieving 10% for the full year, but going forward, how much longer going into fiscal 11 do you think these customer-related problems will continue to hamper growth?
Not really. Let me also explain. There are one or two projects in our order book where there is a customer-related issue. We are removing those projects from our order book completely. And whenever the customer says yes, we will go ahead with that. Currently, our order book is in excess of 90,000 crore, and we have given an indication of 30%, which means by the year end, we will have a more than 100,000 crore kind of order book. The major issue is, as I explained, the financial closure-related issues are behind us now for those projects in the infrastructure sector, our own projects. So we are catching up with execution on those projects definitely. So As far as the other jobs which were put on hold last year, some jobs on the steel sector, they have asked us to go ahead in the third quarter of this year. So we expect that pickup to also happen. So overall, I expect that in the next year we should have definitely a much better conversion than what we have experienced in this year.
That's the L&T management. BHEL's numbers were not quite as bad, but the top line growth was sluggish and muted compared to what the street was expecting. They also need to do quite a bit of work in the fourth quarter to meet their guidance for fiscal year 2010. Here's the BHEL management talking about the third quarter.
The orders booked up to the third quarter have been rupees 36,425 crores, aggregating to about 14,990 megawatts. In fact, we have booked orders around 16,000 crores in the third quarter alone. Turnover up to third quarter for 2009-10 is rupees 7,381 crores, a 15% increase over the third quarter of 2008-09. Cumulative turnover up to third quarter 2009-10 is rupees 20,083 crores, an 18.6% increase year-on-year basis. Similarly, profit after tax for third quarter is placed at rupees 1,073 crores. Cumulative profit after tax up to third quarter 2009-10 is rupees 2,402 crores, which is an improvement of 34% over the corresponding figure of last year.
And now from infrastructure to the other big oil and gas number today. ONGC reported after the markets close, so the stock will react to those numbers tomorrow as trade opens. Numbers looked a bit sluggish. Here's the management.
This after-tax profit of the company during Q3 2009-10 is at 3,054 crore compared to the previous year Q3 2,475 crores, registering an increase of 23.4%. The turnover of the company during the same period is also up by 22.8%. During this quarter, we were required to give a subsidy discount to the marketing company of the order of 3,497 crores, which translates to $18.97 per barrel. Our gross billing during this quarter worked out to $76.66 a barrel, and the net post discount, the net realization at $57.69 a barrel.
And here's a quick wrap of some of the other earnings which came in today from the mid-cap space.
A lot of numbers from the broader markets today. First, the hits. So Biocon, consolidated net sales at 635 versus 436 crores. Consolidated net profit at 80 crores. This is from 28 crores. Axicorp, and a lot of orders from AOK consequently into Axicorp worked well for it. And you saw Biocon was a big hit there. Ipca Labs, again, from the pharma space. Net profit at 58 crores versus 23 crores. Net sales at 394 versus 311 crores. Plus a 5:1 stock split. That stock had a good set of numbers. Again, Piramal Healthcare from the healthcare space. 136 crores versus 59 crores on the net profit. All these healthcare stocks were hits. Amara Raja Batteries and Pawnee Sugar and Edser were three other small cap hits. In line with estimates then, Rolta, as its net profit came in at 62 crores versus 56 crores. So a slight bump up on a Q-on-Q basis, 375 crores versus 350 crores. Slight bump up on a Q-on-Q basis. That was in line with street estimates. Nagarjuna Fertilizer was another stock whose numbers came in line with estimates. Net profit at 12 crores versus 4.6 crores. Remember, ISEC estimates were about 18 crores, so in line to slightly below on Nagarjuna Fertilizers. Simultaneously, Saskin and WWIL were two other in-line numbers. Now, what were the misses? Shree Cements was a miss, as its net sales came in at 866 crores, which was in line, but its net profit came in at 167 crores, which was lower than our estimates of 200 crores on account of higher depreciation costs. Simultaneously, Petronet LNG volumes were much deeper. The decline was much steeper than estimated, and sales came down 9%, and PAT was down 21% at 83 crores. So those were two misses. So it was a mix, more hits than misses, primarily from the pharma space.
Time for a break. When we come back, a wrap of some of the big banking numbers today, including ICICI Bank and Kotak Mahindra, and what's in store from the earnings calendar tomorrow.